Warren said, one day, and I get the source for you, but he said, of all the mistakes that I've ever made, and if you kind of did all the tenants and said, well, Warren, of all these tenants, which one did you make the most mistakes on? He would say unequivocally, it was favorable long-term prospects. That which I thought was going to work out well didn't work out well. Whether it was Dexter's shoe or whatever the case may be, is I thought this company was going to be T plus 10, and at 10, it was going to be this, and it wasn't. So then that brings you up to, and we talked about this a little bit earlier, which is the area that is most mispriced. It's probably not the dividend discount model, the margins, things. It's like, it's competitive. How long does it last? How long can I continue to earn a high return on capital? How long can I continue to get a double-digit EPS growth or sales? Who else? Here's the thing that I wake up here. Who else is in this business with me that's going to take my business away? It's got, Tom Russo Gardner and Quinn, who always talk about Amazon. He goes like, I hope Amazon comes for me last. That's if they'll ever in their way, right? Just hope that they show up the very last, right? So you kind of think, who's the Amazon in my business, right? Who's the Amazon, in my semiconductor business? Who's the Amazon in my cloud business? Who's the Amazon? And go down the list. I'm always looking over my shoulder going, all right, who's coming for? Because they're coming. Because they want the high returns on capital, and they're going to try to do it cheaper, at lower price, and with a quant. So, it took me 30 years, probably almost 40 years, basically, to recognize when you're compounding money. You might ask Meyer this, right? Every compounding money, once you get the return on capital right, it's really just, are you right about how long it lasts? And if it lasts a long period of time, you don't really have to you don't have to worry about overpaying for it. You will be made right. When you're compounding at 20, 30, 40, 50%, 100% like NVIDIA, if you can do that for 10 years, you can overpay for the stock on T1 and still make a ton of money. So that's something that I begrudgingly now have come around to understanding, that where we are as active managers, long only, concentrated, low turnover managers, the mispricing is in the competitive advantage period, how long these things last. So, it took me 20, 30 years to figure out that's the most important part. And it's the most difficult part to figure out. You always do the easy stuff first. Okay? Let me check off the box on all the easy stuff, right? But the hard stuff is, how long does it last?